Friends, welcome to the current session. We are going to discuss the concept person liable for registration under GST law. We have already discussed about what is taxable person. Going to share the screen with you. Give me a moment for that. Yeah. So, friends, earlier in the previous session, we are discussing about these sections. I had shown you certain rules, certain sections of the list of sections of the CGST Act. And section 22 talks about the person liable for registration. And prior to that, we had already discussed the concept of taxable person. You know, the taxable person means person who is registered, as well as the person who is liable to be registered under GST law. Okay. So now we are coming to section 22, where we will be learning about who are the persons liable for registration. Okay, now let us see. First of all, subsection 2, or I will do one thing. Let me, okay, we'll go there. Later on, we'll see the exactly what is the GST Act. I'll take you to the website. But right now, let us first of all, let us read this subsection 1. If you read the subsection 1 of section 22, you see every supplier shall be liable to be registered under this Act in the state or union territory other than special category states from where he makes taxable supplies of goods or services or both, if his aggregate turnover in a financial year exceeds, can you read it? How much? Exceeds?
20 lakhs.
20 lakhs. Okay. And you see what it says, other than special category states. So we need to understand what are the special category states. I'll be explaining that thing. But broadly, we have understood every supplier, if he is a supplier, he shall be liable to be registered under this Act in the state or union territory, right? From where he makes taxable supply. If he is making taxable supply for a particular state, he is required to get himself registered in that state. And the taxable supply can be for goods, can be for services, or can be for both. Right? And in which situation he is required to get himself registered? If his aggregate turnover exceeds 20 lakh. Okay, now you have understood here is a criteria of 20 lakh rupees. Okay, right now it remember it is 20 lakh rupees. You have to remember some other things also, some other figures we have to remember in different situations, those limits are applied. Now you see, now here is a provision, provided that where such person makes taxable supplies of goods or services or both from any of the special category state, he shall be liable to be registered if his aggregate turnover in the financial year exceeds, how much? Can you read it?
10 lakh rupees.
10 lakh rupees. Okay. Now you see, other than this special category states, basic limit is 20 lakh. But for the special category states where a person is supplying goods or services or both, then the threshold limit is 10 lakh rupees. Okay. Now, next point you see, another provision. Provided further that the government may, at the request of special category state, or and on the recommendation of the council, enhance the aggregate turnover referred to the first provision from 10 lakh rupees to such amount, but not exceeding 20 lakh rupees, and subject to such conditions and limitations as may be notified. That particular, this paragraph shows that government has also got a power to enhance this. So basic subsection we have understood that basic threshold limit is 20 lakh rupees for all states, excluding special category states. And for the special category states, the limit is 10 lakh. So two limits we have understood, two threshold limit. One is 20 lakh, second is 10 lakh. Is it clear to you? Now, friends, let us see. Let us go to the next subsection. I will summarize all these subsections after some time, but first let us read it out. Now, subsection 2 says every person who on the day immediately preceding the appointed day is registered or holds a license under existing law shall be liable to be registered under this act with effect from the appointed date. Appointed date, you know what is the meaning when law got implemented, let us say past July 2017. And if someone is having some kind of registration, let us say someone is having a service tax registration, someone was having a bad registration, then what will happen? So under existing law, he was having a registration and he shall be liable to be registered under this act with effect from the appointed date. Right? With effect from that date, he will be liable to be registered. Did you understand what we are discussing? We are discussing about persons liable for registration, and we are discussing the provisions of Section 22 of CGST. So first I told you two threshold limit. One is 20 lakh, second is 10 lakh. And we have also understood government has power to enhance this aggregate turnover limits. And now we are learning if the person who on the date immediately preceding the appointed date is already registered, then he is also liable to be registered. Now let us come to subsection 3. Subsection 3 talks about where the business is carried on by a taxable person registered under this act is transferred, whether on account of succession or otherwise, to another person as a going concern. The transferee or the successor, as the case may be, shall be liable to be registered with effect from the date of such transfer or succession. Now here what has happened, the business is transferred. Someone is having a business, is transferring to someone else, or it is succeeded by some another person. Then the transfer, that means a new owner. Old owner has transferred, a new owner. The new owner is liable to be registered with effect from the date of such transfer or success. Let us say business is succeeded from father to son. The new owner is liable to be registered from the date of succession. Or business is sold by a person, it is transferred by one person to a new owner. Then the new owner is required to get himself registered for the date of such transfer. So the transferee or successor, as the case may be, shall be liable to be registered. Is it clear? Subsection 3. Friends, let us first of all read out these provisions, then we'll try to analyze all these provisions. Is it clear? Now let us come to subsection 4. Subsection 4, it says, notwithstanding anything contained in subsection 1 and 3. What is 1? 1 is here, that is 20 lakh, 10 lakh, and government's power. And what is subsection 3? When the business is transferred, and here transferred will be transferred as a going concern. It is not a different business. Same business is continued. It is transferred as a going concern. Now here this subsection 4 says, notwithstanding anything contained in subsections 1 and 3, in case of transfer pursuant to sanction of a scheme or an arrangement for amalgamation, as the case may be, demerger of two or more companies is pursuant to the order of an high court, tribunal, and otherwise, the transferee shall be liable to be registered with effect from the date of on which the registrar of the company issues a certificate of incorporation giving effect to such order of the High Court. So this is a specific situation. You know, companies get merged and demerged in this kind of scheme. Let us say court has ordered, a tribunal has sanctioned a scheme of merger, scheme of amalgamation. In that case, the transfer is liable to be registered. From which date? With effect from the date on which the registrar of the company issues a certificate of incorporation. With effect from that date, that company is liable to be registered. Suppose company A, company B got amalgamated, and the new company AB Limited is formed. The registrar has issued a new certificate of registration with effect from today. Then with effect from today, one required to get himself registered under GST. Is it clear? Yes or no?
Sir, can you please repeat?
Yeah. I'm talking about this subsection 4. So friends, you see, subsection 1, you have understood, 2, you have understood, 3, you have understood. This talks about different situations. 1 and 3 talks about the persons liable for registration. But what subsection 4 says that notwithstanding anything contained in subsection 1 and 3. Now, for the timing, forget what other provisions are there in subsection 1. 1, you know, 20 lakh, 10 lakh limit is there. And subsection 3 also, you know. The subsection 4 says forget about this. If there is a amalgamation merger of the company, two companies got merged. Suppose there was an existing company. A Limited. There was another existing company. B Limited. And they have gone for a merger or amalgamation under a scheme of merger or scheme of amalgamation. And the court or National Company Law Tribunal has allowed that amalgamation. And the amalgamated company, AB Limited, is formed. Okay, AB Limited is formed. And AB Limited, when it is formed, ROC has issued a new incorporation certificate. ROC has already issued a certificate of incorporation. Is it? And with a new company identification number. And with effect from that date, this new company also needs to be registered with GST authorities. Is it clear to you?
Yes, sir.
Okay. Okay. Now, let us learn some explanations to the provisions. First of all, as you know, subsection 1, what we have learned, aggregate turnover is important because it depends whether registration is required or not. It depends upon the aggregate turnover. And for normal states, we have seen it is 20 lakh. And from special category states, how much? 10 lakh.
10 lakh.
And you know, one more thing also, you know, government has got a power to enhance this, and government has used that power also. I'll be coming to that. Government has used that power, the limits are enhanced. What was there in the basic provision, currently situation has changed. Let us learn that things out. Now, you see, the expression aggregate turnovers are include all supplies made by the taxable person, whether on his own account or made on behalf of his principal. That means if some person is an agent and on his principal behalf he has supplied something, then that aggregate turnovers are also include that thing. Okay, aggregate turnover includes all supplies made by the taxable person, either on his own account or in behalf of his principal. This aspect you have to keep it in mind. Suppose the situation will be given to you. This is a person's own supply. This is the supply made on behalf of principal. Then both of the things has to added up to arrive at the aggregate turnover and to test whether that person is liable to be registered under GST law or not. Okay. Now you have seen one more provision where in the same subsection 1, you have also seen for special category limit, the special category states, the threshold limit of aggregate turnover is how much? 10 lakh rupees. But now understand, the expression special category states shall mean the state specified in subclause G of clause 4 of Article 279A of the Constitution. Except, okay, it is important, except 1, 2, 3, 4, 5, 6, 7 states. What are they? Jammu and Kashmir, Arunachal Pradesh, Assam, Himachal Pradesh, Meghalaya, Sikkim, and Uttarakhand. So if you read Article 279A 4G of the Constitution, There are 11 special category states, namely state of Arunachal, Assam, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. So these are the special category of states, but here we are talking about the except these states. Okay. Right. And here, friends, you have to remember that every supplier of goods and services or both is required to obtain registration in the state or union territory from where he makes taxable supply. If his aggregate turnover exceeds the specified threshold limit. And the threshold limit is important. Now, what you will remember, the threshold limit. Now, threshold limit, since government had power to enhance the special these limits. Now, let us look at this last column. Okay, this is the exemption limit with effect from April 1, 2019. And if you see, there has been some changes. Now, if you see, for a normal supplier who is supplying goods, what is the threshold limit? It's not 20 lakh. How much?
40 lakh.
Aggregate turnover. If it is exceeding 40 lakh, that means the 20 lakh which was there earlier, government by exercising his power has increased it to 40 lakh. But here, what is this? For only for goods. Okay. And for special category state, if the supply of goods, then aggregate annual turnover is increased up to how much? Which was originally 10 lakh. Now it is. Can you read it out?
20 lakhs.
20 lakh. That means what was 20, it has become 40. What was 10, it has become 20 in respect of goods. Now, supply of services. For normal taxpayer, the aggregate turnover, earlier it was 20 lakh, now also it is 20 lakh. And for supply of services, earlier it was 10 lakh, it is also 10 lakh. Only for supply of goods, government has increased the 20 to 40 and 10 to 20. And that too, this is with effect from April 1, 2019. Prior to that, the provisions was different. Is it clear to you? Okay, did you understand?
Yes.
Now let us try to learn what is this aggregate turnover. Aggregate turnover is the crucial parameter for deciding the eligibility of the supplier to avail the benefit of threshold exemption from registration. That means if it is within the limit, then registration is not required. So this is a very crucial figure. And also to arriving at the eligibility for the composition scheme. That is a scheme which will be launched. And as well as for option to pay tax at a concessional rate, this aggregate turnover is important. So for various regions under GST law, the concept aggregate turnover is important. Okay, so we need to understand that, first of all of us know that the turnover in common parlance is understood as the total volume of the business. Then what is aggregate turnover? The aggregate turnover is defined under Section 2, Clause 6 of CGST Act. Let us see. And let us try to understand what are the things which are included and what are the things excluded in aggregate turnover. Right. So the provisions say aggregate turnover includes all outward supplies, which are taxable supplies, exempt supplies, export supplies, interstate supplies of a person having same part, and this has to be computed on all India basis. So throughout the India, whatever the transaction, whether it is taxable supplies, exempt supplies, export supplies, interstate supplies, all has to be taken into consideration. And you have to see it is if it is exceeding 40 lakh or 20 lakh or 10 lakh. It includes all these. So exempted supplies are included. Export supplies are included. Interstate supplies are also. What it excludes? It excludes CGST, SGST, UTGST, IGST, sales, and value of inward supplies on which tax is payable under reverse charge. That means all these taxes and sales is excluded. Suppose turnover includes GST. Suppose you are selling something, the sales price might include GST. So, but for the arriving at the aggregate turnover, these taxes will be removed. So CGST, SGST, UPGST, all these things will be removed. And certain situations, what happens? Tax is paid by following a reverse charge mechanism. Okay, normally what happens? The supplier who is supplying the goods or services, he pays tax. But there are certain situations in the law where the recipient also pays tax. If recipient is paying tax, that is called the reverse charge mechanism. We will be learning that concept at a later stage. So friends, if you're paying taxes and reverse charge mechanism, that doesn't mean that that is your turnover. No. You are paying tax on that, but that is not your turnover. So value of inward supplies on which tax is paid under reverse charge will not be included in aggregate turnover. So now we have understood that aggregate turnover includes the value of taxable supplies, exempt supplies, export supplies, interstate supplies of a person having same PAN, and it has to be computed on all India basis, and it excludes CGST, SGST, UTGST, IGST, cess, and the turnover on and the input supplies on which, or inward supplies on which tax is paid on reverse charge basis. Is it clear to you?
Sir,
Yes, tell me.
sir, I have a doubt in the special cases of the states.
Okay. Tell me, what is
Sir,
it?
can you show the slide?
Yeah, I'll come back to that. I was supposed to come back to that also. We'll do one thing. Let me complete it. Then again, I'll go back to that side. Okay. First, let us learn the basic provisions. Again, I'll be elaborating that thing. All right.
Okay, sir.
I'll come back to that. Now you see. Oh. Yeah. Are you getting it? The meaning of aggregate turnover? Now, if you look at this chart, you can have some clear idea that what are the things which are to be added and what are the things which needs to be subtracted from the aggregate turnover. Just have a look at this chart. It's clear to you? Okay. Now, one by one, we'll be analyzing. First, let me analyze the aggregate turnover. Then other provisions also, which you have raised, we'll be discussing about. Now, aggregate turnover to exclude inward supplies on which tax is payable on reverse charge. What does it mean? There are certain inward supplies on which the recipient, normally GST is paid by the supplier, isn't it? Suppose you are purchasing something. Who is paying GST? The supplier is depositing to the government, not you. You are paying it to the supplier indirectly, but supplier is depositing to the government. So normally it is a supplier who deposits GST with government. But if the situation comes under RCM, that is reverse charge mechanism, that it's not the supplier, the recipient will be paying tax to the government. Okay, we'll be learning that what are the situations that covers, like you see here some examples that are say goods transfer agencies, legal services. In these cases, the recipient will be paying tax under reverse charge mechanism. So when we're arriving at the aggregate turnover, the inward services on which GST is paid on RCM basis will not form a part of aggregate turnover. Okay. So these are second paragraph. You see some examples of services where tax has to be paid by recipient. Like let us say legal services. Suppose you are availing a legal service. Okay. Suppose a company is availing a legal services. So company has to pay GST on behalf of the lawyer. Or same thing is applicable under the goods transport agency. There are some specific provisions you'll be learning that thing. So here recipient will be paying tax. Okay. And in this case, when reverse charge applies, outward supplies taxable under reverse charge will continue to be part of aggregate turnover. Suppose you are providing some outward supplies, which are coming under reverse charge. You are not paying tax. Who will be paying tax? The recipient will be paying tax. But that is your supply. So that outward supply will be included in the part of reverse charge in the aggregate turnover. But inward supplies will not be. Logic is very, very simple. Inward supplies are not, in fact, turnover, but outward supplies forms a part of turnover. Okay. Now let us think of an example. X Limited is paying GST and shipping fees paid to the directors for services rendered by them under reverse charge. Who is paying? X Limited. That means company is paying. Company is paying sitting fee to the directors. When the directors are attending meeting, company is paying them fee. Right. On that fee, company itself is paying GST. Actually, fee is received by the recipient, the directors. Okay. They're the recipient. So they're the service provider. They're the suppliers. But here, company is paying. The value of the service provided by directors to X Limited will form a part of aggregate turnover of the directors. But directors are supplied. For directors, that is outward supply. But for company, these are inward supply. So that will not be included in the aggregate turnover of X Limited. But that will be included in the aggregate turnover of directors. Okay. Now you think GST paid under forward charge of turnover is rupees, forward charge on turnover rupees 20 lakh. And GST paid under reverse charge on inward supply is 5 lakh. You see, this 5 lakh will not be. So your aggregate turnover will be 20 lakh. What is to be included is 20 lakh. So GST paid on forward charge, that will be included. Okay, but a reverse charge, that will not be. Hope you have understood this concept. Okay, here turnover of 20 lakh. 20 lakh is the turnover, not the GST. Okay, when it says GST paid under the forward charge on turnover of this one, the turnover of 20 lakh will be. Right, are you getting me? And GST paid on reverse charge on inward supply, this will not be included. Therefore, aggregate turnover is 20 lakh. Are you getting me? Hope you have understood. Okay, now already you know that aggregate turnover excludes the element of CGST, SGST, UTGST, and ITGST, and IGST, and also compensation cess. Now here is an example. You can arrive at the aggregate turnover. Let us say turnover is 18 lakh. CGST is this one. SGST is this much. Total is this one. So here aggregate turnover will be how much? Who can tell me in this situation? Aggregate turnover is
Sorry,
only
18 lakhs.
yes, exactly 18 lakh. Now, here one more concept here, which I was telling you, include the total turnover of all branches under same PAN. So all branches under same PAN, that turnover will be included on all India basis. For example, a dealer X has two offices. One is Bhubaneswar, another is Bihar. Now, if I want to know, if I want to determine whether the X is taxable under registration, then the turnover of both these offices shall be taken into account. And only if that aggregate turnover exceeds the applicable threshold limit, X is liable for registration. And here you see, in this example, let us say turnover of Bhubaneswar office is 20 lakh, turnover of Vizag is 25 lakh. What's the aggregate turnover?
Sir, 45 lakh?
Yes. Now, whether he is required to be registered, is liable for registration?
Yes, sir.
Yes. And you know the limit is 40 lakh. So, threshold limit is 40 lakh. So, he's liable for registration. Now, next concept we'll see. Value of exported goods and services, exempted goods, services, interstate supplies with distinct person having the same PAN is to be included in aggregate turnover. Right. Here an example I am giving. X Limited, Punjab is engaged in supplying machine oil as well as petrol. Two things you are doing. And you know, petrol is an what? Not coming under the purview of GST. You know, supply of petrol is not liable for GST, but supply of machine oil is taxable. In order to determine when X Limited is liable for registration, turnover of both taxable and non-taxable supplies shall be taken into account. And if the same exceeds the applicable threshold limit, it shall be liable for registration. For example, domestic turnover of machine oil is 20 lakh. Export turnover of machine oil is 5 lakh. Turnover of petrol is 25 lakh. So aggregate turnover is how much? Who can tell me? How much is aggregate turnover? So 20 plus 5 plus 25, because export turnover will also be included. Everything will be included. So total is 50 lakh. Okay. Now one more example you see. Supply on behalf of his principal to be included. That concept also I had told you. Aggregate turnover to include all supplies made by taxable person, whether on his own account or made on behalf of his principal. So an P enterprise is appointed A and Associates as his agent. A and Associates make supply of goods on his own account as well as on behalf of P enterprise. So all supplies made by A Associate as agent of P enterprise as well as his own account shall be included to the aggregate turnover of A and Associates. Example here is, suppose A and Associates total turnover is 20 lakh. Turnover on behalf of P enterprise, the base turnover of an agent is 25 lakh. So aggregate turnover is 20 or 45. What is the aggregate turnover? Here aggregate turnover will be 45 because turnover of P enterprise as an agent will also be included. Friends, try to understand this aggregate turnover is different from the turnover in state. When I say aggregate turnover, it is used for determining the threshold limit for registration and eligibility for a composition scheme, and as well as eligibility for exercising option to pay tax under concession. But however, once you have decided one person is eligible, he is registered. Okay. Then the amount payable under composition levy shall be calculated on the basis of turnover of the state. Tax will be payable on the basis of turnover of the state if someone is paying under composition levy. What is composition levy? That also will be learning in our subsequent classes. So right now understand that aggregate turnover is different and turnover in a state is also different. And when you're learning composition levy, then you have to understand the composition dealer is not supposed to make any interstate supply. They have to supply within the state. Okay, and here at that point of time, the turnover in a state will be relevant to arriving at the liability of GST under composition scheme. Okay, so friends, one more. There are few other points that there we need explanation. First of all, the concept of special category states and how rates are different. This thing I'll be explaining you. Then applicable threshold limit, some other examples we'll be doing. It's some limit and we'll be doing some exercises. Yeah, regarding special category states, etc. So what we'll do it. Some more clarifications are still required regarding to complete this concept. So we'll do one thing. We'll right now time will not permit us to continue all these things. So we'll stop our today's session here. Next class we'll be able to complete this concept. Okay. Thank you very much. We'll catch up in your next session. Thanks a lot.